Welcome to DeepTech315. Our three topics today are: what is the status of the potential for a TikTok ban? Second, we're going to talk about layoffs at Tesla, what it means for the company, deliveries, profitability. And last, we're going to give our perspective on some comments from TSM about the overall chip market slowing a little bit more than what they had believed before. Still growing, but not growing as fast as kind of what they thought the industry would grow at before. So we'll go back to the top. It is TikTok. As a reminder, about a month ago, the House voted that they wanted TikTok to be divested. They had 6 months to divest once it was signed into law. President Biden had said that he would sign that in, so it was waiting on the Senate. The Senate goes slower than the House, and it was expected to take a few months for the Senate to vote on this. But as the Senate was looking at it, they were giving feedback to the House saying that the time for divestiture was too aggressive, that they felt that they should give them more time. So to try to move the bill forward, the House has now added an amendment to it, or is voting to amend it to basically give TikTok a year once it's voted into law to figure out its divestiture. So going from 6 months to a year. This is being folded into a broader package that includes aid to the Ukraine and I believe something related to Israel. So unclear whether that's even going to see the light of day. But what stuck out to me is this matters. TikTok matters. It matters because if you look at what happened to Snap stock on news that they were going to try to fast track this or respond in anticipation to what some of the Senate's concerns were, the stock traded up 7%. Meta, at the moment that was announced, traded up about 1.5% on this. And of course, 130 million, 100 million people in the US use TikTok daily. So they care about this. And I want to finish kind of my thoughts on this, and I'm going to turn over to you, Doug. But my big picture is there is energy in the House to try to get this banned. There is momentum or some commentary, as I mentioned, from Biden. The House vote again was 352 to 65 in favor of a ban, which is surprisingly unified there. And then it comes down to who's going to win the presidency, because all this is going to naturally fall on the next president's desk. And if you look at the odds, it's basically 50-50 now. If we were talking a few weeks ago, Trump was favored, I'd say comfortably favored. Now it's kind of a coin toss here. So putting all of it together, stirring it up, what's your take?
Just the beauty of our government in motion, how long things take. I mean, we were talking about this 4 years ago. Donald Trump signed an executive order before he left office. And then President Biden then signed an order to overturn President Trump's order. So we've kind of been messing around
I'd
with
forgot
this
that.
for
So
4 years.
Biden originally was in favor of keeping TikTok?
Well, his order overturned the order that President Trump had signed
Okay.
for, I think it was another body of the government to essentially investigate more, as if we needed
Okay.
more information at that point that TikTok was doing nefarious things. I just think all this motion is great, but when you've been working on something for 4 years and it still hasn't happened, I don't think it makes any sense to pat anybody on the back. I mean, if we think that this is an issue with national security, it should have been done a long time ago. That's the reality of it. And it seems like there's some general consensus that, the United States is built on freedom. We're built on free speech, but we don't want to allow platforms that encourage domestic espionage in some ways,
Mm-hmm.
or domestic sabotage in some ways from foreign adversaries. So let's just get it done. And the biggest fear is we're actually talking about the 4-year cycle. We're back into a new cycle now where who knows what happens here. We have a change in office. President
Right.
Trump has said he has changed his stance on the TikTok ban. So we might be talking about this in 4 years from now as well.
Makes sense. I don't know how it's going to all play out. I do share your views that this should be banned. Programming note, I am not a TikTok user, so easy for me to say. Let's jump to our second topic. Tesla had some headcount reductions. This, I believe, did not catch our last episode last week. And they are cutting, call it around 10%, announced earlier this week. And what I think this speaks to, Elon said that there's some redundancies. Elon loves being efficient. course, he wrote the book on that with Twitter, entered with about 8,000 employees, and it was estimated that he cut it down to at one point 1,500, so call it an 80% headcount reduction. So he definitely wants to get more out of people. The Tesla executives that I've talked to and Tesla employees who have left over the years always talk about that. They get worked really hard. So I wonder how much of the 10% cut is really needed, and or versus him just trying to kind of force the issue. But I would say my central takeaway here is that the delivery numbers for 2024 are still too high for Tesla. They are, the street as of this recording is looking for 5% delivery growth. If you take what they just reported for the March deliveries, call it 370,000 deliveries, and grow that at 10% sequentially for this year, which I think is being on the favorable side of the equation, that's going to get deliveries for the full year to be down 5%. So I suspect when they report on the 23rd, we're probably going to see some revisions down there. And I think that this headcount reduction is in reaction to what is a different EV environment.
I think the bottom line is Tesla's just in this everything is bad news cycle right now. I mean, oftentimes, and particularly in tech over the last 18, 24 months, when we've had these job cuts, the market has tended to react favorably to it. They did not in the case of Tesla. And I think that's just the reality of this compounding number of questions around the stock. What's happened with Model 2? We've got price cuts with FSD. Why are we cutting price on your most exciting product in many ways? And what can we really expect from robotaxi? I think the number of unanswered questions just skews investors to say, hey, they're cutting headcount. That can only be a bad thing. It can only mean bad things for demand, right? And so until Tesla can find a way to get out of that negative cycle, it's going to be a tough road for them, I think, in the nearer term.
I'm glad you did mention what's going on in FSD robotaxi. We should kind of fill in some updates on that front as well. Is that they are Reuters is now doubling down on what they said, and that Model 2 is canceled. That's what we had said a week or two ago, that's basically on hold, and that they are fully pursuing robotaxi. And Elon has said that I think his quote was balls to the wall for robotaxi and autonomy. If not, you're just a horse carriage, something like that. So it feels like he's building the line around what's going to happen in autonomy. August 8th.
But what's it going to take though? Like talking about this negative news cycle, what do you think turns the tide for them? Like how do people get positive?
It's just, they need a quarter. Over the last 7 quarters, margins have gone down 6 of the last 7 quarters sequentially. There's 1 quarter that was flat. The gross margins are now 17.5%. It peaked at 29.5%, as I mentioned 7 quarters ago. They just need some stability, need to move that in the right direction, or they need to move deliveries, start to grow again. They just need some good news, because when you come off of such a high growth phase and numbers keep going down, people don't know where the bottom is. And so investors are just keep guessing that it's maybe lower. I think ultimately the pendulum is swinging too far negative here. I've been positive much higher, so keep that in context. But I think that's what's going on, is what's it going to take? It doesn't take for them to figure autonomy out. They just need to show that electrification there's a bid in the consumer market for electric cars, and that they're growing their deliveries year over year.
Yeah, momentum is great when you have it in your favor, and it's brutal when you don't. They just don't have it right now.
Well, brings us to our final topic, which is TSM. This is in one of our holdings at Deepwater, and they of course are the company that makes the chips for companies like NVIDIA and Apple, and have been powering the AI this infrastructure build. And they report their units on a monthly basis. So when they actually report the quarter, there's not too much mystery around it, but they do have commentary about kind of how things are looking forward. And they did talk about this incredible demand that they can't keep up with. The AI chips are about, I thought they said 10% of their total, 9% of their total business today. They expect it to be 20% in year 2028. So that is growing really nicely. But the piece that has spooked markets and the stock today is this comment that they expect the overall industry to grow at 10%. And previously they had talked about more than 10%, kind of this generic comment about more than 10%. And when I put it all together, it feels like so what if the overall chip industry is down? I'm trying to get the read through to the AI infrastructure, like 70 or 80, 90% of their business. You kind of forget about it, don't you, when you're looking to try to figure out what's actually going on with AI?
It seems like the market's not forgetting about it entirely, just given that the stock's down a little bit as we're recording this post earnings. But that's my view, is that, look, I think we were all sort of thinking this semiconductor slowdown kind of demand around consumer electronics, auto, we were kind of getting through the hard part, getting out of the woods on some of that stuff. And it feels like the commentary said, hey, maybe we're just not quite there yet. And I don't know that that's that big of a deal. It feels more like a timing issue. I think auto will come back. I think the consumer demand, we've long talked about the potential for sort of an AI-driven upgrade cycle at some point for the consumer electronics space. So that could be a future tailwind. So to me, it's more delay in terms of timing. That was probably a little bit disappointing for investors. Positive thing, though, if you think about the read-through for the broader semi space and AI, was they talked about revenue there growing over double, not double digits, over
Yeah,
double, over
over
100% year
100%.
over year. Yeah, and then 50% CAGR for the next several years in
Yeah.
the AI space. So that space still feels like it's growing incredibly fast, probably as we would hope them to say.
Yeah, I mean, there's so much dependent on our outlook over the next 3, 5 years on making sure that the AI infrastructure is getting built at a speedy rate, and their commentary would support that. So I was encouraged. Next big stop, I believe, will be Nvidia, and they're kind of on an off cycle quarter, so that's probably going to be it's an April quarter. Takes them a month to kind of put things together, so that probably puts it early June before we hear from them. Does that sound right? Early June?
I guess right.
Yeah.
And we got the mega caps next week, though. That'll be
Mega caps next
a pit
week.
stop on the way to Nvidia,
Yeah.
I guess.
Yeah. It's going to be a big pit stop next week. I'm looking forward to that. On behalf of Deep Tech 315, bye for now.